Good morning, everybody. Happy Monday. It's June 22nd, 2026, about 8:42 Eastern time in the morning. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Hope you had a great long weekend. We were together last Thursday, of course. Friday, the markets were closed in observance of the Juneteenth holiday. Don't look now, but we're going to have another holiday coming up very, very soon. In about a couple weeks, June 3rd, markets are going to be closed for observance of Independence Day, which falls on a Saturday. I believe markets are going to be closed on the 3rd Friday, so another 3-day weekend. I love these things. Love these 3-day weekends. They're great. But in the meantime, we have some business to discuss here with the markets and so forth. So it was a pretty good finish to the week, even after some volatility on Wednesday. Of course, what happened on Wednesday, we had the Fed policy decision. They decided to leave rates unchanged, but you could tell by new chair Kevin Warsh's statement on Wednesday, and then also the press conference, that he's sort of leaning in a hawkish direction. Certainly that's what the market interpreted on Wednesday, is that we had a big sell-off at the end of the day, but then bounced back a little bit on Thursday. And we're trying to regain some ground here. Don't forget, Thursday was a big options expiration day, and usually there's a bit of a spillover effect into the following Monday or Tuesday. So that would be today and tomorrow. The fact that it was a 3-day weekend complicates things a little bit more, but people who got stock put to them over the weekend, or maybe got stock called away, a lot of that is going to get settled and over the next couple of hours, and then we'll kind of get an idea of where things are going to be headed. There's some good earnings coming out this week. We have Micron coming out Wednesday after the close. FedEx, I have it on either Tuesday or Thursday. I have no idea what day it's going to be. It could be tomorrow. It could be Thursday. I don't know. Trip.com, HB Fuller is going to be coming out. Jeffries, KB Homes after the close on Tuesday. Get a good read on where home builders are at. We'll hear from a couple of other smaller companies as well. BlackBerry coming out Thursday morning. Also McCormick, consumer name. So we'll get a little bit of a read on where things are at. And then next week, things really slow down. We'll have Nike, I think, is the main name coming out before the end of the month. But then after that, another bit of a break into the first part of earnings season in July. So it's coming right up. So futures kind of holding steady over here. We were down quite a bit overnight after the futures opened up at 6 p.m. Eastern time, but we've rallied back, and apparently some of the news about the war in Iran that was bantied about over the weekend seemed maybe were corrected or considered to be false. We see S&P futures up about about flat line right now, and NASDAQ up about 85 points, and the Dow Industrials up about 70 or so. There's a deal on the table between Chevron and Microsoft for a power deal for 20 years, which is starting to light up some of the energy names, like even Caterpillar is up on this news. GE, Verona, we're seeing a little bit of upside in Bloom Energy. Yields are up a little bit this morning on the long end of the curve, and we're seeing higher yields in the 5, 10s, 20s, and 30s. A little bit higher in the lower end. We're seeing a little bit of an extension in the 2s and 10s spread as well too. High yield has been very attractive. In fact, I can show you that chart over here. HYG has been very, very good for the past couple of months. We had a little bit of a sell-off with the rest of the markets. Now, don't forget high yield. We had a little bit of a sell-off, of course, last week when the markets went down. Don't forget, high yield junk bonds correlate very strongly with the equity market. So we, if you plotted an S&P 500 chart on top of this HYG chart, which is the high yield, it'd be very similar. It correlates very strong. Now, why is that? It's just, I've written a couple of articles on this, and it's fascinating that you see a bond hybrid, like in a high yield or a junk bond, correlating very strongly with the equity markets. And that is because there is an equity component somewhat to the high yield. So when a company out there is selling bonds at a high rate because they're a high risk company, and the economy is strong and cash flows are good, and they're able to pay off their debt and their interest at a higher rate of interest, well, that the bond premium is going to skyrocket up towards par, right? And if they're able to pay off that bond, well, you can pay it off at par. And if you're an investor buying some of these high yield bonds, if you're picking them up at 60 or 70 cents on the dollar, and you hold on, and they end up paying back those bonds, where you're going to make a great return. Think about that. If you're paying 60 cents on the dollar and you get paid back at a buck, that's 40 divided by 60. That's almost a 70% return on your money for a bond investment. That's extraordinary. So there is a nice component over there. Again, it's reliant upon the economy being strong, right? If the economy is strong, there's no recession on the way. These companies have good, strong, robust business, and there's no chance of them losing some of that business and thus defaulting on those loans. Then high yield is a way to go. So we're seeing tighter spreads in high yield than we normally see right now. And look, high yield returns are strong. The yields are up there, 7, 8, 9%, right? And you can get an attractive gain of return on high yield if the economy is good and the conditions are right. So that's a little bit of a lesson there for you on high yield. And again, you know what? We talked for just a moment about earnings coming out this week. Micron is one focus that everybody's going to be looking at. Stock has been super strong here, certainly since the last earnings report came out at the end of March. Came back down to about the 300 level. It's now up 300% for the year, and then up over 200% since the last earnings report. So, the story has been told here lately. Shortages in memory, shortages in DRAM chips, and companies like Apple are going to have to pay up for some of that memory because it's just not there. Storage in the memory is just not there. So it's affecting stocks like SanDisk, which is going to hit a new all-time high this morning. Micron, of course, is going to hit a new all-time high. Western Digital, Seagate Technology, and in South Korea, you got SK Hynix and Samsung, both making new all-time highs. So I think some of these groups, people feel that they're overextended. Yes, they are overextended, but that is just a condition. That's not necessarily a signal. Stocks that are overbought can still be bought on the pullbacks. Look at Micron. I'm showing you this chart right over here. This thing pulled back nicely over here from 800 all the way down to 650. It gave you a nice entry point here, and it jumped right in here. Pulled back over here again in the middle of June from about 1,050 all the way down to 850. Gave you another nice entry point to get into the stock. So I'm only showing you the 50 and the 200-day moving average over here. I could show you shorter-term moving averages. As you can see, the 10-day moving average, which is the blue one here, and then the 20-day moving average has been holding in like a champ. So the short-term moving averages, if you use those regularly, the 10 and the 20 provide excellent entry points to get into some of these names. Remember, I've always said the best trends barely give you a good chance to get involved in the stock to get in. They don't give you a chance to get in at all. So you keep wondering yourself, well, when am I going to get a chance to get in? And the answer to that, frankly, is it's hard. It's very little chance to get in there. But you use these opportunities on the dips to start adding to your positions or putting a new position on. All right. FedEx later on in the week. Let's take a look at that one. Looking pretty strong, actually. Not bad. Higher highs, higher lows on this chart, and it's pulled back recently over here. I think the lower oil prices, lower energy prices, we see oil coming down about 121 this morning, about almost 2%. That's going to help FedEx. I think the strong economic data we've had for the past couple of months has been good, and I've seen a lot of FedEx trucks out there. That's just good anecdotal information, and I think that if they report good strong numbers here, and even a strong buyback plan like they had had announced back in March, the stock could to make a move up towards 350, maybe up towards 400 by the end of the year. So take a look at FedEx later this week. As far as economic data is concerned, let's take a look at the calendar. Nothing today. PMI flash report coming out for manufacturing services tomorrow morning about 9:45, right after the market opens. And they have later in the week, we'll have durable goods GDP third estimate coming out as well too, along with income and spending. PCE price index for May. That's going to be an important number because that is a preferred measure of inflation that the Fed likes to look at. We'll have some Fed speakers coming out as well too, and then Friday economic indicators report, wholesale and retail inventories, and then the final Michigan consumer sentiment will be out at 10 a.m. in the morning on Friday. So lots of stuff to digest here, lots of stuff to figure out. I'm really excited about Wednesday. What's Wednesday happening? Wednesday is going to be a webinar with my new friend, who I've been chatting with a little bit here, Andrew Heisinger. Andrew Heisinger, who is Andrew? Andrew is the founder and moderator of the Quant Data system. Quant Data is an options flow trading system or program that he has put together. It is extremely popular. He does a great job with this. I was a subscriber there for a little while. Really enjoyed the platform. So he's going to share with you some of the things that he's looking at, some of the things that he uses as an options flow trading tool. Now, there's a lot of them out there, a lot of different options flow tools out there you can use, but I think this is one of the top ones out there. And again, I've used it, and it's extremely good. It's extremely reliable to find the data here. And the nice thing about Andrew, again, he's a nice guy, but it is also the fact that things are always evolving and changing, and he's making the platform better and better every single day and every single week. So sign up on the website. It's free. Doesn't cost you anything. And it's the Understanding Options Flow with Andrew Heisinger here. You can click on go to the website and go to Trading Insights, then go to Webinars, and you'll see, scroll down a little bit and you'll see June 24th. We have a couple other webinars coming up, of course, in July and August and September. But this one is coming Wednesday. Andrew Heisinger. Click on this register now button, and then put your information in there, and I'll see you guys all on Wednesday afternoon at 4:15 Eastern time. Don't be late. And I will leave it there, everybody. Have a great day. And take it slow today. And as always, manage your risk properly. What is managing your risk? Managing your risk means doing some selling, buying some protection, raising your cash, keeping a very good focus and eye out for new opportunities to come out. There's going to be some new ones today. I'm looking at Cerberus, which is coming out with earnings tomorrow after the close. CRBS, which is a new issue that just came out. I'm also looking at a couple of transport names, a couple of names in the semiconductor group. Again, this group is strong. I saw Intel got an upgrade today, or over the weekend. So pick and choose. Find the names that are strong. Go with those. The names that are weak, you probably just want to dismiss them and don't pay attention to them. Manage your risk carefully. Manage your risk. That's what it's all about every single day and every single week. All right. Have a great day. Go get them, everybody. I'll see you guys all on Thursday morning. Thanks again. Take care. Bye. Understand. So like